Good morning, everybody. Welcome to today's 1Mby1M Strategy Roundtable for Entrepreneurs. 1M1M, as you know, is the first global virtual accelerator in the world. We are headquartered in Silicon Valley, and our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue, build $1 trillion in global GDP, and 10 million jobs. Now, in support of this mission, we do these roundtables every week. We do actually a lot of roundtables, not just this free roundtable series. We do a lot of roundtables that are for our premium members. So we are pros at doing these roundtable mentoring sessions. This is our 278th free online mentoring session. So we've been doing this for a while. We've had over 30,000 people participate. And it's been, it's been fascinating to have people from all over the world at these sessions week after week and have the opportunity and the privilege to work with you, learn what you're doing, be able to add a little bit of value in your process, and just amazing to see how much entrepreneurial energy is bubbling all over the world today. So the event is being recorded. You will find the recordings after the session. If you're live tweeting the show today, please use hashtag 1M1M. Our Twitter handles are at 1Mby1M and at Romana, and you can follow us there. We make sure we publish a tremendous amount of very rich, inspirational, educational content on entrepreneurship through these channels, both the Twitter channels as well as Facebook, LinkedIn. Everywhere we are, we try to preserve the same value of giving you interesting stuff to learn from. Now, the YouTube channel is 1M1M Roundtables, and these recordings of the sessions are all available there. All the prior sessions are available there, and this one will go there as well. So, again, another very rich body of content that you can take advantage of. These are the call-in instructions for the show. I will put this slide up later. We're not quite ready for call-in yet, but when we are ready, I will put this back up. We are going to start today with a conversation with Daniel Kane. Daniel is the CEO and co-founder of Modernizing Medicine, and before that, he also co-founded Blackboard, which is now a pretty significant educational technology company. Daniel, welcome. It's been great to be able to have you here today.
Oh, thank you, Saran. I'm so excited to be here today.
Absolutely. So, Daniel, let's start by introducing our audience to you and to Modernizing Medicine. Tell us, what do you do?
So, Modernizing Medicine, it's kind of right there in our name. We focus on the healthcare system. U.S. healthcare is about 20% of our entire country's GDP. So it's awfully large. It's in tremendous need of disruption of technology to help improve efficiencies and lower cost. And that's where we really play. We focus specifically on the surgical and medical specialties. We have thousands of physicians who are ophthalmologists, orthopedic surgeons, dermatologists, and we provide them cloud and mobile technologies to make them really unbelievably efficient. And today's a very special day. It's October 1st. Today's the day that ICD-10, which is a very large new standard, hits healthcare. And our users have been tweeting all morning that it's just Thursday. It is a day like any other, and that's where technology can really shine. So we bring technology to the forefront in medical practices. We do a lot with mobile applications, iPad applications, Android apps that really help with patient engagement, that help with understanding how to run more efficient clinical trials. And the whole purpose here is to be able to bring efficiencies to healthcare, but also to be able to collect data in ways that physicians can make better decisions, which lead to better patient outcomes.
And if you go back to where you started then, talk about maybe talk about the use case that really got you started in the healthcare IT market.
Sure. So as you mentioned when you were introducing me, my background is in education technology. Blackboard is one of the larger ed tech companies in the world. And it was after I had taken that company public and we had actually sold Blackboard that I was keeping my eyes peeled for my next big adventure. and it didn't take me long. It took me about 2 weeks after leaving Blackboard for my wife to kick me out of the house and tell me I needed to get a checkup. I had just turned 35, and in her book that was old enough to start taking health more seriously. And it was in that experience as just a patient going through a normal routine checkup that I was appalled by the state of technology in healthcare. This was in 2010 that I had this sort of revelation, and it was 2010. I mean, by then, you know, it wasn't as if the internet and technology hadn't permeated really every major ecosystem, but it seemed like healthcare somehow got abandoned or left behind, and I didn't understand why. And it was in that encounter that I met my co-founder, who is a practicing dermatologist, still is today, and I was just simply curious at why he wasn't using, you know, mobile technologies. He wasn't using technology at all. He was paper-based, and it turned out in 2010, 2011 that the overwhelming majority of healthcare was using paper. And it really was right there in its name. It was a healthcare practice. They were trained and they were supportive and they wanted to take care of their patients, but they were making it up as they went and they were doing the best that they could without the benefits of understanding how everyone else was treating their patients, what things were having better outcomes, what treatments were more or less effective for a certain type of a patient. There was no ability to visualize patients' information. They literally were carrying around a paper chart. And so there was a huge opportunity I saw to bring my skills of technology fairy dust, if you will, and sprinkle it in the right places in healthcare to try to move it. The challenge in healthcare is that it's so darn big and it's so darn heavy and there's so much money running through it that it's an awfully hard industry to really get the attention of practitioners, to get the attention of patients, and to be able to use technology to really bend the curve.
But this dermatology segment was something that you actually zeroed in on as your first segment, isn't it? If I recall our prior conversation.
That's exactly right. We started in dermatology for two reasons. One, at the time, dermatology was one of the most underserved specialties in healthcare when it comes to technology. There have been surveys going back, 20, 25 years on the adoption of what are called electronic health records in various specialties. And when I found dermatology, it was single digit. So more than 90% of dermatologists in this country weren't using any sort of technology. And this is 2010, 2011, and that was right when the iPad was coming out. And to me, it seemed like such a perfect fit, this touch-based visual technology and this visual diagnostic vertical of dermatology where everything is on your skin. And so I figured it was just so obvious to me that, hey, if you used a touch-based interface where you would pinch and zoom, but instead of it being a map, it was the anatomy of the human body, and you were touching locations and using that we could design an interface that was incredibly intuitive to our doctors, and intuitive interfaces drive time savings, and time savings drive bottom and top line. And so we felt like we could, and it turns out we actually very much could, build a technology that would save those doctors 2 or 3 minutes per patient. And the thing about dermatologists is they see 50, 60 patients a day, and so 2 or 3 minutes of time savings times 60 patients a day, that's 2 to 3 hours of ROI, and that allows us to charge a premium for a product, which allowed us to build a very sustainable business that we scaled over the last 5 years.
And the use case was diagnostic of the dermatology discipline, right?
It was diagnostic record keeping, e-prescriptions, lab ordering. It was really soup to nuts, everything they were doing clinically in their practice.
Yeah. Now, Dan, you did something quite unique by recruiting a large number of your customers, these dermatologists, as equity investors in your first round of financing. Please tell us more about what you did, how you did it, and how it has impacted your business.
Sure, and it turned out to be really fairly unique, even to this day, though I wish more entrepreneurs were doing it. So let me put you in the time machine for a second. Let's go back to 2010. Worst economic climate really in the history of the United States, right? I mean, arguably in more ways. Though in hindsight, we look back, we don't remember the pain, but 2010 was a tough year. Housing bubble had completely imploded. There was no such thing as angel investing, early stage venture, VC. I mean, everyone was just head in the sand hoping that, it would pass, and thankfully it did. But the idea of going out and raising an early stage round in 2010 was almost laughable. And so, put yourself in my shoes. I'm a serial entrepreneur. I had, $1 billion exit. So I've got some decent track record. I had raised over $150 million of venture by then, so I know how to raise money, and I've got a really good Rolodex of people to raise money from. So I start making calls, and everyone takes the call, everyone takes the meeting, but I could tell immediately no one was going to write a check. I mean, everyone was centered on just maintaining their portfolio, weathering the storm. They're not investing. And so it was almost out of necessity that we started to look for alternative ways of funding the company. And fortunately, I was in a position to self-fund to a certain degree, but you should never use your own money in building it, even if you can. You just are way too, risk-adverse. You run differently as an entrepreneur with your own money than you will with someone else's. And, I have not yet mastered the ability to not be frugal with my own funds. Which I think is a good thing. I think it makes me a better entrepreneur, that I take more risks when I'm supposed to. That's the whole point of venture. But let me get back to sort of how we raised funds. It was fascinating. We did find a group of healthcare venture capitalists. And remember, my background's ed tech, so these are new people to me. And they wanted to do diligence on the company, which is completely reasonable. And I had about a dozen beta clients at the time, who I didn't have a relationship with, but they had started they'd found us through a conference. We had been to one show, and we had a handful of people just prototyping and betaing the software. And our investors said, could we speak to the betas? And so I organized a quick call with the betas, and I said, would you be available for a due diligence call with a handful of investors? They want to understand you, the market, the potential, and so on. And what I didn't realize is that my customers, well, my beta clients, I guess you could call them customers, were fairly well-to-do physicians, and they knew even more maybe than I did the potential of the software, and they understood it. And they said, Dan, we're happy to do diligence, but can we participate in the round? And in my mind, friends and family, it might be a check for, $10,000, $25,000 if they really believe in you. But little did I realize that these doctors, my original angels, we're going to start writing checks to the tune of $100,000, $200,000 each. And we ended up raising over $3 million from our betas, from our prospects and our earliest clients. And it did a couple amazing things. It not only gave us more than the amount of capital we were looking for, but it built this investor evangelist base of physicians who were now using my product, who had invested in the company, who had a vested interest in its success and its promotion. And so not only did they become, just really excited about the company and the future, but they became these evangelists that really took this technology into the streets. They told their peers, they told their friends about it. They really became a channel, a sales force for me. And to this day, our channels, it's less investors these days, but our clients really do serve as our primary initial get-to-market strategy.
So it sounds like what you've done is some sort of an equity crowdfunding from your customers without really using a crowdfunding platform, yeah?
Well, I mean, you can imagine no greater evangelist than someone who's using it, right?
That's right.
And so, in crowdfunding, you see that, especially if it's for a cause-based type. That the biggest donors are typically people that are either, they're emotionally attached to the cause, or they have a reason to do it. I mean, here, your customers have a vested interest in your success. And so,
if you look at what's happened in the crowdfunding industry, the place where crowdfunding has been successful is kind of advanced sale of your products. So somebody is proposing to do a product, and the people who are going to buy it are kind of paying in advance, and that's what has been the most successful way of doing crowdfunding projects. In your case, it's kind of, you did equity, of course. Equity crowdfunding is just now coming into the industry. It hasn't, for the last 5-6 years, there's been crowdfunding, but not necessarily equity crowdfunding. But in your case, it is equity crowdfunding. And it's fascinating. I actually think that the best way to do equity crowdfunding for a vast majority of technology companies especially, but all kinds of companies, is going to be the way you've done it, in the pre-crowdfunding, pre-equity crowdfunding world, is by getting customers to finance your businesses. So this is why I wanted to highlight what you have done, as a much earlier experiment. Now, obviously this opens up a whole range of, topics that we ought to discuss. questions like how many shareholders do you have, what kind of reporting and investor relations do you have to do to manage these larger number of shareholders, and do you recommend this strategy to other entrepreneurs?
Great questions. So first and foremost, I absolutely do recommend this to other entrepreneurs. It's important to understand the right vehicle, though. So we didn't do direct to equity. I think it's dangerous, especially in the early stages, to get wrapped around the axle around valuation. We used a convertible note and gave those earliest investors a discount to what became the Series A. I think that that's a wonderful way to get out of the conversation of valuation. It gives everyone what they need. It gives them a discount so they have a return in between their investment and the actual Series A. But it lets, if you will, the smart money handle the valuation and the terms, and it lets everyone else get a benefit for their risk and their time. So the convertible note was very successful here. To this day, we have well over 100 investors, and it is, it brings upon, pros and cons. The pros are obviously this evangelism that comes from your customers. The con is how do you manage 100 people in investor relations. We did very good jobs early on because, again, we were a bit more seasoned than maybe some first-time entrepreneurs in expectation setting, in letting them know that there would be quarterly updates, but things like information rights wouldn't be part of their $100,000 or $200,000 check. That they would have preferred stock at the Series A. That when their notes convert, and that Series A preferred would convert to common on certain events and so on. So we gave them investor rights, but we didn't do things like anti-dilution rights. We didn't get into a lot of the protections that you get into in your more later stage in professional funding. So it was very much around expectation setting. But we keep them very engaged, and because we always do right by them, and what I mean by that is, while we don't have to have an obligation to let them participate in future rounds, we have let them participate, and participate they have. These guys have really stepped up many times now. We've now raised 5 rounds of capital. We've raised almost $90 million of capital. Obviously, some of the bigger checks in that are more traditional, professional, private equity groups and venture capitalists. But our solo practitioners, who wrote a $100,000 check, came back and wrote another $100,000 check, and then a $200,000 check. And so these guys are committed, but they have the benefit of being able to see where this is going. They see in the industry, they see our adoption. For instance, in dermatology, we have over 35% of the entire U.S. market now using the application. So we've had tremendous success and penetration. But it is unique. It's unique to have a quarterly call with investors and have 100 participants on the line. Now everyone's very supportive because the growth has been there, but it is closer to being kind of public than you would normally think of in a smaller private round.
But you don't have to field calls like 100 investors are not calling you from off the cuff and asking for updates. You don't have to deal with that, and your investors accept that that's not part of the process.
That's right, and I would say that 98 out of 100, if you will, get that. There are definitely 1 or 2 who are more active investors, and we're very accommodating. I mean, again, it's not a huge amount of time, but most of them get it. Most of them understand that their job is to be physicians. My job is to be the entrepreneur and run this business and give them updates and sort of promote for them where it's going. But no, we don't have very activist investors. They own their stake. They understand their rights. We are very upfront with them. I think initially there was this feeling out process, but I think we did a very good job of expectation setting, and I think that's the key to anything, whether it's a customer or an investor, is making sure that up front you set expectations and that you reinforce that through time. And so now we're 5 years in, and our investors are very happy. We communicate regularly with them, but they don't feel that they have to be activists to be able to get information.
Let's switch gears and talk a bit about how you've built the business in terms of customer acquisition and scaling and so forth. Talk to us. Of course, it sounds like a big part of the customer acquisition strategy has been these early customers who also became investors and then became grand evangelists for the company. What has been your other customer acquisition strategies and scaling strategies?
So the biggest and most important is having customers that we take care of. I run a more of an inverted pyramid from a typical SaaS company in that my sales force is my smallest department. My client services and customer support is my largest. In healthcare, it's a little bit different. You can't, bang on doors. You can't walk in. You can't even get them on the phone. Don't even try. And we don't. To get to physicians' offices, it's entirely a referral base, and so we've got to earn the referral. So we do things like constantly monitor Net Promoter Scores built into the application on a rolling 30-day basis so that we have a constant stream from our 75,000 users on how we're doing, what are we doing right, where do we need to focus, who are we delighting, and we see it. The higher that NPS gets, the higher our sales velocity gets. And so
what do you do to drive the Net Promoter Score? How do you nudge your customers, satisfied customers, to refer new prospects?
Well, I think our customers understand. I mean, they're physicians themselves, so they understand how they'd want to be contacted. We do everything we can to delight our customers, and we start with our product and our quality, but then our entire customer service experience, how we engage with them on social media. When we hold events, we're always just completely beside ourselves at the turnout. We had our first users conference last year, and user conferences in healthcare are not exactly as well attended as other technology conferences, because a physician shutting down their practice is sacrificing, $10,000 a day. So, these are high-demand physicians that if they're not seeing patients, they're not generating revenue. So you typically don't see them shutting down their practice. We had 1,000 participate in our first users conference last year, which was just, blew our minds. So we delight them by our products, by our service, by our team, and they know that the only way that this is going to continue to grow is if they tell people about their great experience using our software. So today's a great example. Today is the implementation of ICD-10, and our customers have been tweeting all morning about how to them it's just Thursday. Like, the software took care of everything they needed it to do, and they were able to see their patients. And for other people, it may have been a terrifying day of a lot of manual work to look up codes, but our software automation really helped them. And I expect now there to be a big bump in sales because our customers will tell their peers, hey, how was it? Those that aren't using our software are going to hear very quickly that, the people that did use Modernizing Medicine had a great day. It was unlike any other day, and it was just normal compared with their own story of a lot of pain. And so it really is our customers that are moving our organic needle. The other thing we've done is acquisition, right? We have acquired 2 companies. And so I think that there comes a point in growth that you want to layer in things both horizontally and vertically. We did a horizontal application at the beginning of the year for a service that laid on top of our technology, and now we're scaling billing services and revenue cycle management to our customers. And then we did a vertical application by buying the largest GI company, gastroenterology, EHR company. And so we completed that acquisition just a few weeks ago. And so I think it's important to complement your own direct sales force, your own organic growth with channels and with acquisitions. Okay.
Interesting. Very interesting. Now, what is your feeling about this unicorn mania that we're experiencing? Are you a unicorn yet? Is it important for you to be a unicorn? Here in Silicon Valley, we observe a frenzy to be labeled a unicorn. Entrepreneurs are doing all kinds of silly, stupid things, including accepting terrible terms just to hit that billion-dollar valuation number so that they can brag about that status. Your thoughts?
I think that's a terrible idea. I think it's, there are fundamentals to a business. I mean, maybe it's that we're outside of the valley here in sunny South Florida, but it is about growth, and it is about, to some degree, fundamentals. It isn't so much about profitability yet, which is, I think, good. Though we're targeting over $100 million of revenue next year, and so very quickly we're going to have to figure out. And it's not so much figure out, but it's stop focusing purely on top-line growth and start making sure that we're not just talking about a path to profitability, but we're actually walking the talk, which we are going to do next year as well. But no, I wouldn't consider myself a unicorn. I think that we've raised a decent amount of money at what I consider to be fair valuations. We've brought in some very savvy investors. They hem and haw about our valuation, but I don't see this as ridiculous. valuations in healthcare IT, range from, call it 4 to 7 times recurring revenue, and we've really been in that sweet spot, maybe on the higher end, but we've got a high growth company, but we're not raising money at 50x, 100x revenue. I mean, there are companies in the Valley that absolutely do that. To do it, they're giving ridiculous downside protection, 2x, 3x liquidation preference. I mean, it's participating preferred, and a lot of these entrepreneurs may actually know what those things mean, and they're just happy to do it just to say they got, $1 billion valuation. No, we're not a unicorn. Will we be a $1 billion company? Absolutely. We're going to get there the old-fashioned way of just blood, sweat, tears, and hard work. But no, we're not a unicorn.
If you have a good, solid business, and if you get to 100 million in recurring revenue, and in due course you'll get to 150, 200 million in recurring revenue, you'll be a unicorn, a legitimate unicorn, because you'll get the right multiples and the right kind of robust, market evaluation, not some kooky bullshit terms.
Right. Yes. I think the new unicorn will be the company that actually has that 250 million of recurring revenue, a churn rate of a fraction of 1%. I mean, that's we're I guess a baby version of that today. I mean, we're experiencing tremendous growth and low churn, all the things you'd expect, but we didn't come out of the gates at $1 billion valuation, and I'm okay with that. I don't mind doing things on a more, if you will, traditional way, though I don't think there's a lot traditional about raising 90 million in 4 years and scaling to 100 million in revenue, but if that's the anti-unicorn, then so be it.
Yeah, and as long as your foundation is solid, you will. It's a matter of execution, and it's just a matter of another year or two, and you will get to the right numbers as opposed to these artificial numbers. Absolutely.
That's right.
Then what words of wisdom do you have for our entrepreneurs who are way, way, way earlier than you are? We are obviously going to be working with some of them today, later on in the program. You've done 2, and you've done 1 that you've taken public, and then here's a second one that is going well, and fingers crossed everything will continue to go well, and you will take this one public as well. What are some nuggets that you want to share with our audience?
So a few very quick ones. The first is that this is actually my 5th company. I'm just as proud of the failures as I am of the success. I've had that one home run that people know, and Modernizing Medicine is doing well, but I've failed some companies. I failed them quickly. I failed them hard, and I learned a ton from them. And I'm not, no entrepreneur should be ashamed of failure. As a matter of fact, I don't think you've earned your stripes until you've had a failure or two. And so let me put that out there. It isn't a perfect 1,000 batting record. It's actually something much more realistic than that. Second thing is that, that real companies have real revenues and business models that make sense. I mean, I so caution against, getting tied into the frenzy of business models that have sort of ethereal revenue tied to them someday, or monetization of large numbers of users, or empty room problems where if you can only get both sets of people in the room at the same time, you can have a business. I found that my successes, both with Blackboard and Modernizing Medicine, are around, software that people pay money for, with a recurring revenue model, with, a low churn rate, with decent growth year over year, with a lot of revenue streams that are ancillary. So ways to upsell, whether it's services or other products on top of the same base. I think that those are really solid models. I think that investors, there's a lot of money out there, and sure, you can raise, $10 million for some crazy idea, but it's few and far between. And out of the magical world that is, a special place where special people live in Silicon Valley, it doesn't really happen that way. Instead, get to revenue. Get your trailing revenue. Doesn't have to be big, but nothing will attract investors like showing that you can actually build something that people want and that they'll pay you for it. Once you have that, and it can be $100,000 of revenue, it doesn't have to be millions, you're fundable. So I'd say that, focus on driving revenue, focus on showing, and it doesn't matter if it's just the beginning of a longer vision, but showing that you can actually sell something and support something, that you're not a prototype, you're not a product, but you're a company, I think makes all the difference in the world of raising capital.
Yeah, totally, in sync with our philosophy that we are interested in helping build real companies, not some pipe dream kind of thing that may or may not become a real business, and where the business model is the exit strategy. This is not the kind of companies we are interested in. This is not the kind of companies we recommend or advise our entrepreneurs to build. In general, we kind of, discourage people to pursue those strategies of, artificial valuation, artificial maybe exit strategy kinds of ideas. So thank you, Dan, for reinforcing that message, and good luck with the next stage of the journey. We'll keep in touch.
That sounds great. Thank you so much for having me. It was a delightful conversation, and let's do this again soon.
Likewise. Fabulous. Okay, folks, we are going to start the mentoring part of the session today. Let me do some expectation setting here, just like Dan was setting expectations with his customers. Please, to all the presenters, I want to highlight that we are here because we want to work with you and help you succeed. We are completely on your side. We are not on the side of investors. We are not on the side of anybody else. We are on your side. We know you're doing your best, but because we have been doing what we have been doing for a long time, we may know how you can do what you need to do better. And most likely you're doing your entrepreneurship project the first time, and if we can help you, avoid avoidable mistakes, that would be a win. And just accelerate things. That's the whole point of an accelerator, is you learn from people who have done it before and can help you accelerate your journey. Every single business has numerous challenges at the start. The 0 to 1 million phase is the hardest, but everyone has potential to succeed, and we believe we will be able to, succeed just because our methodology, now that we've been using this methodology and running this program on that methodology for the last 5 years, the methodology works, and if you follow the methodology, we believe that you will succeed as well. You are going to need to be open to feedback. Now, you may disagree with my feedback today. That's fine. My job here is to give you candid, direct feedback. I'm not here to tell you what you want to hear. If you want somebody to tell you what you want to hear, maybe you should go talk to your mother or your sister or your wife or your husband, somebody whose primary role is to kind of put an arm around you and make you feel good. That's not my role. My role is to help you make progress. That's why I'm here, and that's my commitment to you, is to really tell you what you need to hear so that you can mitigate pitfalls and you avoid mistakes. Now, not all businesses can raise money. Many of you come here with the single objective of raising money, and raising money also does not guarantee success. We will help you, we will work with you on your business, we will give you feedback on your, maybe on your fundability situation, maybe what do you need to do to be fundable, etc. All of those are valid areas that we would be working with you on. Remember, doing something worthwhile is very hard, always very hard, especially in the beginning. So the 0 to 1 million phase is going to be very, very hard. And we will work with you shoulder to shoulder, day after day, week after week, month after month, year after year. We are not a 3-month acceleration program. This is a program that you can use for multiple years, and many of our entrepreneurs have used it for multiple years, as long as they need to. Now, while the pitches are going on, some of you may not be pitching, but please participate by asking questions. Asking good questions is how you learn. And it is an art. You want to practice that art and perfect it here, because this is a safe place. 1Mby1M roundtables are safe working sessions where we gather together as a supportive group and we work on making progress on your businesses. So let's get started. We're going to start with LeadCrunch. Olin Hyde from San Diego, California is our first presenter. Olin, please unmute your line and let's get going.
Hi, Swimmer. Thank you so much for having us. This is great.
Pleasure.
I was very impressed with Dan Kane's presentation. And what we're doing, pardon me?
I said, isn't it? It's wonderful. What he's done is fabulous.
And it's a great lead into what we're doing. What I love about what he's doing is building a real business, talking about real customers and customer delight. What we're doing is very simple. What if you could grow your business by repeating past success? Every business has their favorite customers, and sometimes your favorite customer might be your most profitable customer. Sometimes it might be the customer that buys most quickly. And so what we built was an artificial intelligence engine that finds precise clones of your best customers. So you can think of it like Pandora for sales. Pandora, you give it examples of your favorite music. I like old school music, so maybe I like Eagles and Rolling Stones, and Pandora suggests I like the Foo Fighters, and that works. Our system, you give it examples of your best customers, and it gives you examples that look just like them. If we could get to the next slide. So our company actually started by defeating Palantir and IBM Watson to win a Lockheed Martin contract for the United States Navy. And we'll tell you about our team at the end. We got a real, the reason we won was, one, our team. Secondly, we were faster, cheaper, and better than Palantir and IBM Watson. And I have a lot of respect for Palantir, not much respect for Watson. Watson, you'd be struggling to get a demo out of them. But Palantir, we're really proud. You were talking about unicorns earlier, and Palantir was actually one of the early unicorns. And we looked at this business. We said, you know what, we're not going to scale to be a big company trying to compete in the defense industry. For one, there's a lot of restrictions on what you can do with the technology. Two, you're dependent upon the government. So we looked for better ways. And so what we did is we developed about 6 different minimally viable products, and we took them out to customers to see which one would get traction. And if we get to the next slide, what we discovered is that what we're really good at is finding faint signals in big noise. That means we can find what's most relevant in any type of data. And one of our early products was LeadCrunch, this minimally viable product. So we took it to 5 companies, and 7 bought. So how do you sell 7 out of 5? Well, the reason 7 out of 5 bought, we'll get to that in a second. I'll cover that in the next slide. But on this slide, what we discovered is that the history of marketing technology is really the history of increasing levels of noise that's associated with an increasing level of return on investment. Back before the internet, people would do sales by the telephone. You'd call, and it would be called dialing for dollars. Then came along email, and the noise floor went up. People were suddenly bombarded with more information, but it was so cheap to send the information that your return on investment made it worthwhile to do lots of email marketing. Now we're at a new generation called inbound marketing. I just got back from Salesforce the Dreamforce conference, where 150,000 people showed up, and they were talking about, what they're doing now is about inbound marketing. And a great example, another unicorn would have been HubSpot. So the problem with inbound marketing is you don't have any control, and unless you're one of the best content creators to get your signal above the exabyte of data per day going on the internet, it's not going to work for you. So what we learned was people are really hungry for predictive leads. And what's the importance of predictive leads? It allows you to control your growth because you can predict who is most likely to buy from you. It reduces your customer acquisition cost. Next slide, please. So the problem is that lead generation's broken. It's been broken for a really long time. Our oldest competitor had 2 American presidents work for them, Abraham Lincoln and Ulysses S. Grant. That's how bad the industry is. It has these really old players in it that are not very innovative. Only about 1 in 2,000 leads typically converts for a business-to-business sale, and less than half of salespeople are actually going to make quota. So while we were talking to these hundreds of customers that we went out to, we discovered this quote from Tom Tungus, who's a partner at Redpoint Ventures, a big VC fund. And he said, you know, the biggest value is at the top of the sales funnel. Next slide, please. So what he was talking about is that most sales funnels look like this, that it starts off with too many bad leads, people that are never going to buy. And then the salesperson, when you get down to the green part of the slide, they're spending a lot of money qualifying them. And then you finally get to the customer. And so it's distorted, it's expensive. Next slide, please. So what we did is we developed a technology that puts the highest quality leads at the top, reduces the cost to qualify it, and it results in a 6-time increase in sales and a much lower cost of customer acquisition. Next slide, please. Here's one of our early customers. He was customer number 16. And what EBSTA does, Bernhard Peters is his name, and I'm actually going to call him today. Bernhard is in charge of growth for EBSTA. EBSTA has about 30,000 customers, and they have a really cool technology that allows you to import your LinkedIn data into Salesforce and integrate Gmail into Salesforce. And if you use Salesforce, you know that using Gmail with Salesforce is really hard. They make it easy. What he got from our system is a 300% lift in qualified sales leads. That alone he was thrilled with. It cut his sales cycle almost in half, but most importantly, he said, you know what? You guys told me to go after new markets I didn't think about. And that's what we're really proud of, was we helped them grow into new areas. Next slide, please. So the why now? The financial reasons are pretty clear. Marketing technology spending right now is around $23 billion a year in the U.S. It's growing very quickly. Our competitors like Radius, LeadSpace, LeadGenius, they're focused on the enterprise. And that brings us to the social reason. We're focused on the mid-market. And the mid-market companies are getting bypassed by all the sophisticated technology because everyone, like you pointed out earlier, they're chasing unicorn dreams. And it's usually harder and more expensive for startups to sell to mid-market, but our technology, the third reason, enables us to lower our cost of customer acquisition and allows us to find the fortune at the bottom of the pyramid. Next slide. So our market, our beachhead found us. Financial services companies, I told you how we sold 7 out of 5. How do we do it? Well, 2 of them were lenders. And what do lenders care about? They want to get their money back. So their borrowers started using our technology, and boom, we found our beachhead. Our market right now, total available markets are about $1 billion, which is the 50,000 mid-market B2Bs in America. It plays into the larger market of marketing technology, which is about $23 billion. I didn't put this number up there because it's kind of a crazy number. In the United States, you know how much is spent every year in lead generation? $118 billion, and that's what we're changing. Next slide, please. So our product is so simple that my poodle can use it. You just upload your best customers, you download the leads from us, then the next step where it gets smart, you give it feedback. Thumbs up, you closed it, thumbs down, you didn't, and the system gets smarter the more you use it. So we're using very sophisticated artificial intelligence algorithms that make it really simple and easy for the end user to use. Next slide, please. And that's proof in the way we compare to our competitors. It takes 5 minutes to sign up with our product. Our so-called smart competitors, Infer, LeadSpace, Radius, 2 weeks. So, and when you use our competitor products, you need to be pretty sophisticated. You need to know what persona marketing is. You need to know a lot of marketing lingo. You have to give it a lot of theories. Ours, you just give examples of your best customers, and boom, you get 300 to 1,200% improvement, and most importantly, anybody in the organization can use it. Next slide, please. Business model is pretty simple, software as a service. It's a free trial. We really feel that we're so confident in our product that we give free trials. We're just now starting to roll out the subscription model. It starts at $250 a month and goes up. We're finding that our average is around $2,000 a month. Next slide. And so our financial projections, we were ramen profitable last year, so we ran a profitable business last year. This year, we think we will run a little bit of a loss because we had some the development costs and learning experiences along the way. But we will be profitable in less than 6 months on less than $500,000. Right now, we're raising $1.5 million seed round. That will close in the middle of November. It's under a master promissory note. We already have soft commitments for about half of that. We expect to grow this thing to be a very profitable business all along. So pretty much at this point, the money that we're taking is all gasoline that we're pouring on a fire that we know is burning. Next slide. And this is why it's burning. So we went from 0 to more, and this is out of date because we're moving so quickly. We have now 500 companies waiting for LeadCrunch in the first 2 months that we've rolled it out, and that's on 0 marketing budget. We were named one of the cool companies in San Diego this year. We got so much attention on Product Hunt that Entrepreneur Magazine called us, and we're now going to be featured in Entrepreneur Magazine in the December issue. We're stealing customers away from our biggest competitors, which is really fun. Cabbage is coming to us away from Radius. And we have some great success stories in there. So this is what we're doing, and you know, if you look at our total pipeline so far, it's worth something between 13 and 15 million if we closed it all, but we don't know if we're going to close it all. So are we 90% wrong, 80% wrong? Doesn't really matter. We still have done awfully well with absolutely no marketing budget, and so imagine what we can do when we actually have money to spend on marketing. So our team is why we're successful. Is it's really about grit, not brains. Grit is what Americans call somebody that really tenaciously works hard to get something. Our data scientist is also a PhD astrophysics dropout. He built quant models on Wall Street and climate models before he joined us. Our VP of Engineering also has an MS in Computer Science as well as an MBA. He came from the Signal Processing Group at Next Wave Wireless in Northrop. Yeah, I wrote my first line of code at 12, and our full stack, our VP of Engineering, our full stack developer, Sean, has done 8 stars. He's the best developer I've ever worked with. Fantastic. My partner, Sanjeet, is the sales guy, and he teaches sales at UCLA Anderson. 3 of the 5 of us went to grad school at UC San Diego, and we've actually been sponsored by UC San Diego. So thank you. I know I'm out of time, but I'm so excited I just can't help myself.
So what brings you here? It's fabulous. What you're doing is fabulous. I did a company in sales lead generation. I know this industry inside out. I love, you know, innovations in the lead generation and qualification area. So you have a huge supporter here. What brings you here?
I wanted to be here because of you. You know, I love this space too, and it's funny, we get 2 types of people. People that hate our space because it's not very sexy, and they think, oh, well, you must be scraping LinkedIn. We're not. Or you must, you know, how can you create a competitive advantage, and there's so many people in the industry. We get a lot of criticism. But then we get the people that really love it because they see how broken the system is and how it can be, how it can really be transformed with technology. And the reason we wanted to come today is we really think that our technology, we love your mission. You know, let's create $1 trillion of growth in the world economy. We're very U.S.-centric right now because that's where we're getting our data from. But we would love to see our technology used by people around the world that are looking to sell to U.S. businesses. And we think that that has a lot of value to your audience. We also think that your program is doing a great service to the community. And also, I really have a lot of respect for your background.
So just before we move to the next presentation, I just want to give you one pointer, and I cannot, I've been trying to remember the name of the company all through your presentation, and I cannot. I have seen a company that is a direct competitor to what you're doing that has a minimum of $5 million in revenue. I can't remember what their revenue level is, or I don't remember what is the name of the company. So if you go look in our website, in our blog, most likely you will find this company in the Thought Leaders in Big Data series of interviews. That's the closest I can remember right now off the top of my head, but there you do have a close direct competitor doing exactly the same thing you're doing, AI mapping of leads. So
we do. They're out of Israel. They're out of Israel, so they're using Israeli AI technology, and you're right. The difference is we're using U.S. AI technology, so there's a little bit of a national rivalry there. They're focused more on the enterprise. We're more focused on small and mid-sized business. We believe we have a technical advantage, and we also have an execution advantage. And yes, they are a very good company, and there's room for more than one of us doing this. So you're absolutely right.
That I agree with. All right, good luck, Olin. We're going to move to the next presenter. Thank you for an excellent presentation. Shina Akinboboye. Shina from Lagos, Nigeria.
Yes.
Opidy.
No. Yeah, Shina from Opidy, from Nigeria.
All right. Hello? Tell us, what are you working on, Shina?
Okay, 1 second, please. Sorry. Okay, yeah, thank you. Opidy, opportunity for your interest directory. Okay, so can you go to the top slide, please?
Yes.
Okay. Now, about Opidy. Opidy is actually an opportunity-oriented social network that helps users to know opportunities that would match their interests and needs. The concept of Opidy is this. Now, wherever you are in life, as professional interest, you also have private things you want to look out for. By profession, you might be a banker, but private interest, you might want to understand. It's a social network that helps you around all of those. Knowing what would fit your interest and what will fit your specific needs. So can we go to the next slide, please?
Yep.
Yeah. Okay. Now, what value are we offering to our users? Now, firstly, you'd have the chance to access opportunities on just anything. The same way Quora is built. You can ask questions on anything, get answers on anything. So we are saying come and access opportunities on anything, no opportunities on just whatever matters to you, you get to know opportunities about them. Now, next thing is our focused interaction. Now, this comes for our user flow algorithm. The concept of the focused interaction is that whatsoever you have not defined as an interest for you, you won't get to know about it, first of all. Then secondly, you can only interact with people who have similar interests as you. I would explain that on the next slide later. Thirdly, you have the chance to define beyond your professional interests. You can also define your private interests, things that are private to you. You can also define them on Opidy. Then secondly, you have the chance to meet with people who can solve your needs. Whatever needs you have could be also an interest to some other person. So by way of sharing opportunities, you definitely have solutions to your needs. Then lastly, you know whatever thing has been shared with ease. Because the concept of Opidy is whatever opportunities someone shares will be tagged by saying what kind of interest is it, what kind of opportunity is it, then who's the owner of this opportunity. Next slide. Yeah, so how does Opidy work? To give an example of that, let's say we have John and Fred. They're both first-time users of Opidy. John has a defined interest as business, sports, career, and groups. Then we have Fred having a defined interest in programming, music, fashion, cooking, and business. Now, the concept of focused interaction. Now, the way you have on LinkedIn, you can choose to connect with a professional. On Facebook, you can request to, you can make a friend request. But on Opidy, interaction is not open. It's focused. So now the question is, can they peer on Opidy? They can only peer because they have business as a common interest. If John and Fred have nothing in common, they can't peer. The Opidy algorithm is designed in such a way that if you don't have a similar interest with somebody, you can't peer with the person. Now, the concept of tagging. when something is shared, like I said in the value proposition, whoever is sharing it, the Opidy algorithm helps you automatically tell you are sharing. So whoever is receiving it understands that this is what I'm receiving. So you focus, you're not distracted on whatever thing you are getting from your peer person. Then sharing. Now, what do you get? What do you get? You only get things that is in common with the both of you. To give an instance, if John shares an opportunity on sports, Fred and John are paired. Fred would not see that opportunity because he's not paired to John for the sake of sports. He's paired to John for the sake of business. So that's another concept of our focused interaction to help our users get focused in whatever thing they do. So to continue on how it works, we have what we call whiteboard. It's similar to a Facebook wall. Now, what you see on your whiteboard are opportunities that are shared. Then when people make inquiries, like they want to know more about your interest, know more about the opportunities, you get to see there. When people share also to support their interest in terms of opportunities, you also get to see. Then what appears on your whiteboard is strictly from your peered Opiders, people you are paired with, and only on the reason why you are paired with them. Then you also have the option to release whatever thing is being shared to a larger community called Opidy pool. Now, the concept of Opidy pool is this. We understand that as you start to use Opidy, you might have a network that is not large enough to provide all of the opportunities you want. So when you provide answers to your queries. So when you share an opportunity, you can, or you have a request to make, you can decide to share it to a larger set of people who can actually provide you with answers or respond to your query on the opportunity. So by default, the goal is set to show you just posting on your defined interests and the needs and also free. But you can always change the settings to whatever thing you prefer. Next slide, please. So who are the target customers for Opidy? Based on the validation, age range falls more between 16 to 45. Now, why are we going after those people? They are young. They are tech and social media savvy. These people are very ambitious and they're quite inquisitive. They want to know things. They are trendy. They have interest in a whole lot of things they want to know. And these people are students and they're also professionals. And they're also possible service providers. And they have lots of passions they are willing to explore that they don't really have on other platforms currently. Like, to give an instance, like in Nigeria, you don't have a lot of students on LinkedIn, but you have them on Facebook. And that's because it looks a bit more professional for them. So they want a place where they can explore their other interests. Like people who like to sing, what opportunities do you have when you sing? What opportunities can you get if you like to cook, if you're into baking, if you're into fashion, programming? They want to affect all of these opportunities. So they have lots of passions to explore, and that's why they are also our target customers. Next slide, please. Now, on customer validation. Yeah?
So one thing that bothers me about what you're presenting here, Shina, is that you are proposing to do another social network that is orthogonal to a Facebook or a LinkedIn, and you're assuming that you will be able to get enough people to come onto a social network like that. Now that is a very, very expensive, extremely capital-intensive proposition. Have you thought about that?
Yes, we have, and our concept is to start small with our Nigerian market that affects other West African countries, then bootstrap and seek funds the much we can, but we definitely want to bootstrap first till we reach a good milestone.
Now, it's very difficult to bootstrap social media companies because there's very little revenue that generates in the beginning. So how are you going to bootstrap?
Well, we are four. We're currently working. We've worked for a while. I have personally worked for 4 years. And the average number of years we have worked is 3 years. And currently
so you plan to do a bootstrapping with a paycheck strategy? You want to keep your jobs and you want to do this on the side? Is that what you're saying?
Yes, on the side for just 1 year.
That's fine. That's fine.
For just 1 year, yeah. Okay, so can I continue now?
Yes, please, go ahead.
Okay, yeah. On the customer validation, we did some getting out of the building as advised by Steve Blank. So we manually engaged over 500 potential users. We didn't do this online. We spoke to people one-on-one. And what are these people we spoke to? They're about 79%, about 14% of them being employed. The other ones are not employed, self-employed. Now, what was the striking question we asked those people? We asked them if they would like to know and share opportunities that would match their interests and meet their needs. That's the sole objective of Opidy. Now, we got a feedback of yes, as 81%. Then no is about 2.2%. Then a lot of people say, okay, just general opportunities. That's about 14.5%. Now, then we also asked another question. We asked them, how important is it for you to focus on your interests and meeting your basic needs? And for a whole lot of people that we surveyed, it's very important for them that they focus on the things they want. I mean, I don't know about the other parts of the world, but in those parts, people are growing tired of social networks. People are tired of the regular social network. It doesn't really offer so much aside coming to know about your friends, what they're posting, what they're doing. People now want to focus on what they like. People now want to spend time exploring their own passion. So that's the whole essence of Opidy. And asking people how important is it for them, we have people saying it is very important, like I mentioned. And we have about 20% saying it is important. Okay, now, based on the feedback we got from people, that led us to do some iteration on our business model. Like, for instance, we are so focused on opportunities. And people said, what if I want to ask a question on my interest with the people I'm peer to on that interest? So that's why we came up with the concept of, okay, you have the chance to create an inquiry. You can keep your inquiry public, or you can decide to go private. Private like a messaging thing between you and the person. But remember, you can only peer with someone who has a similar interest as you. Now, you can release to the Opidy pool. That's another iteration we did. Then you can also get detailed. Like, for instance, now, I might be a programmer, and Maureen is a programmer. Maybe I like to program with Java, and Maureen likes to program with, say, Visual Basic.NET. We might not want to peer to each other, but if we are not detailed in terms of what we know in programming specifically, we would connect and we wouldn't know the right opportunities. But if we understand that we have different interests in programming, we wouldn't have to connect, or we will connect understanding that, okay, our interests are different. So that's the essence of getting detailed. Now, convenience, you mustn't really respond to an opportunity immediately. You could decide to say you want to save for later. You could ignore it, or you could report abuse, depending on what it is. Then people also ask, what measures do we have in terms of safety and security? What we are trying to do, the way it's been on Airbnb, is we're trying to ensure whoever registers on our platform is verified. We'll keep some level of verification in check. So ensure we have a spam-free platform, and you can trust who you are pairing with, and you can be willing to share your information, share opportunities. Then people also ask that since Opidy is going to be an opportunity sharing platform for your interest, can they also have the chance to advise us? I mean, over here in West Africa, a lot of people want to have access to celebrities, to the rich people they see on the news and on the rest. So that's what we want to do. And it will be an invite-only program that you can speak to an advisor on Opidy for free. Okay, now on the revenue model, of course, because it's a cross-sided, it has a cross-sidedness, it's going to be largely on interest-based ads, targeting users of specific interests. Then another thing we are also considering is an SME package. like for small businesses in Nigeria. What we'll do for them is if you pay for our SME package on Opidy, you'd have an ad-free page. I mean, your page will be free of advertisements. It's all yours. Then also an e-store, an e-commerce store, when you can facilitate your services to people using the Opidy platform. Like people who have interest in fashion and you're an SME based on fashion, you can connect with those people using Opidy as a platform to sell your services if you pay for the SME package. Then also, we also give you the chance for inbox delivery. Like people who use Opidy privately can also see your products being advertised to them in their inbox. Then we also give you the access to use your Opidy page as a custom domain name. Now, for the advisor credits, the concept of our advisors is that you can only speak to an advisor publicly. You can't go private with an advisor. But if you decide to say you want to go private with an advisor, then you have to subscribe for an advisor credit. And we did ask people this question: would you be willing to pay to say you want to speak in Africa? And people said, wow, that would be an opportunity to speak to the richest man in Africa. If I can pay a few dollars to do that, I mean, I would pay. Then Opidy Interactive. What we intend to do with Opidy Interactive is that we want to have like a sort of meetup and conference, maybe quarterly, between Opidy users and some of their specific advisors and mentors. That's the essence of Opidy Interactive. Now, can you go to the next slide, please? Customer acquisition strategy. Okay, now, firstly, we want to go on online survey to gather more feedback and use it as a tool to also direct people to our landing page. Our landing this weekend. Then we also want to do a whole lot with word of mouth and referral campaigns. Then we'll try to do a lot of campaign on Facebook, use Quora, use a lot of free tools that we can use to just spread the Opidy name and the mission of Opidy. Then email marketing, write to some tech blogs here in Nigeria that I like to write about startups. There are a lot of them here. Then we also have a lot of crowdsourcing platforms and startup sites that would like to see what Opidy is. We're already in touch with some of them. Then influencers to give us their endorsements. Then we'd also want to go around to schools, to conferences, to meetups, to focus groups, to pitch the Opidy idea to a lot of people and have them sign up on our landing page before we launch our MVP. Then why our theory has is that because we are bootstrapping, we're being careful on how we spend money. We'll go on hard, but we'll try to go as much as we can organically before we do the hard thing. Now, next slide, please, on the market size. Okay, yeah.
Shina, I think we understand what you're trying to do. I would like to give you a bit of feedback, which is the whole point of being here.
Okay.
You know, what bothers me about what you're proposing here is that it tries to do too many things. Because, you know, you're talking about pairing people up with advisors, mentors, celebrities, people with interest in fashion, people with interest in blah, blah, blah. I think the chances of your project being successful is if you can really zero in on an intent which brings people together to do something with. Like if you talk about fashion, for example, okay, there are actually social networks that are designed around fashion. So Polyvore, for instance, is an example of people where people are connecting around fashion, and all the features and functions in that social network is around fashion. So that's the whole, yeah. And that particular user base has a very specific set of needs. If you're talking about people coming together to look for jobs or projects, those are very specific types of networks, very specific. The features and function requirements are very different. You know, like you okay. have all these places like Odesk, Keylance, and so forth. These are people, these are exchanges that bring together social networks, exchanges that professional networks that bring together people on both sides of that coin. So if you try to do too many things, I don't think you will be successful. A generic social network that tries to do too many things, I don't think is going to be successful today. You can look at Airbnb. Airbnb is a marketplace where people are basically people who have rooms in their homes, who want to rent those rooms to people who are interested in traveling to their city, are coming together in a social network context. That's very specific, very driven on a particular intent, a particular context. And I would like you to actually go study the e-commerce, my e-commerce and from e-commerce to Web 3.0 book, where I discuss this notion of Web 3.0 very extensively. So I would like you to have that as background. You can download, you can buy the book on Amazon. Kindle, it's an electronic book, so it's very easily available, and really focus on applying the Web 3.0 formula to your idea, but really figure out what is the context in which you want to do this business. I don't want you to do a horizontal business. I think it's going to fail.
Okay.
Okay? So do that homework, and then if you want to work more with us here, I will talk about how to work with 1Mby1M in a moment, and you can, you're very welcome to join us, and I'll be happy to help you further.
Okay, yeah, thank you.
You're welcome. Okay, folks, that concludes the mentoring part of the program today. I'm going to take you through a little bit of information about how to use the 1M1M program, and then we'll go do open Q&A. We will have plenty of time for open Q&A. Now, one request, if you like what we're doing here, please refer 1M1M to 10 serious entrepreneurs in your network. And you see that the word serious is in bold. It's because it's going to take a lot of years to build a serious, significant company. And we want people, entrepreneurs who have realistic expectations and the commitment and resilience to do slogging, essentially, to build something consequential. Now, in terms of resources, 1Mby1M.com is where your entire journey starts of using the 1M1M resources. We have a fabulous blog where you'll find plenty of free resources. This is completely free. You'll find entrepreneur case studies, entrepreneur journey stories, lots of trend analysis, lots of pointers, lots of nuggets and wisdom through which you will be able to learn, and it's free of charge. And then you can also use the Entrepreneur Journeys book series, like I just pointed Shina to one of them. There are 12 volumes of Entrepreneur Journeys books, and you can double-click on whichever one of them is of relevance to you. So bootstrapping with a paycheck is another one that is relevant to Shina's situation, who's trying to also bootstrap a company with a paycheck, and we fully support that mechanic of building a company as we do bootstrapping using services. So bootstrapping is very much a part of our philosophy and methodology. Now, in terms of how you work, so we have these free roundtables where we are able to work with you to some extent. Now, today is Thursday, right? Next Wednesday, we have a premium roundtable, and we also, add in lots of premium roundtables as and when we need. But there's a premium roundtable, a private roundtable on Wednesday morning. If you decide that you're going to work with 1M1M and you join the premium program, which is our $1,000 annual membership fee program, what you're going to get access to is our curriculum. And in that curriculum, there is a tremendous amount of methodology guidance. You will study the curriculum, you'll zero in on the core topics, you will start learning those topics, you will come to the roundtable next week, and then the following week, and you'll have an opportunity to discuss topics, get your own strategy questions clarified, and that's really how we work. We work with you in these free roundtables, giving you some amount of feedback, actionable feedback. And then the rest of the work we do is in the premium program, where you use the curriculum, where we teach you topics that you have to master in going through you know, in your entrepreneurial journey, and then we work with you week after week after week, month after month, year after year in the private roundtables, hands-on with direct strategy consulting, mentoring, coaching. We are going to be working on your projects with you, shoulder to shoulder. That's our commitment to you, and that's what we do in the premium program. You get a little flavor of that here in the public roundtables, in the free roundtables, but in the premium program, that's really what we do. We do help you with financing. If you're coming here with financing is your core objective, we will definitely help you with financing. We have a huge Rolodex of investors that work with us, and you know, we understand what is fundable, how to get to a fundable situation, and how to be interesting to investors. And then we will also introduce you to those investors. So that's pretty much what the offering is in the premium program. You go to the website and you can look at the $1 Million Club link where you meet case studies of successful premium members. I was just talking to one of our premium members, Dan Stewart, recently. Dan started his company within the premium program, has been in the premium program for, I think, 3 years, and really did very, very well. And he's doing, you know, a substantial amount of revenue, several $1 million worth of revenue at this point. And he was telling me that he's getting pings from people who want to buy his business. And he was saying that, you know, many of my friends have raised, you know, a lot of venture capital, and the kinds of exits they got, the amount of money they were able to make through those exits, I will be making more than that because of the, you know, methodology that we followed in 1M1M, and as a result, he has pretty much, you know, control over his company, and he will net the entire amount of the exit if he decides to sell. He hasn't sold yet. He's enjoying building his business and growing his business, and it's going really well. So just, you know, that I give you that example as a case study of, you know, somebody who has chosen not to raise money even though he could have raised money. At the same time, we also have, you know, the company in the program who has raised the most money is FreshDesk. They've raised close to $100 million. And they also started in 1M1M right from the very beginning. You know, we work with them on their Series A. Before Series A, they got us grants that we helped them win, and so on and so forth. And today, this company has over 50,000 customers globally, and so forth. So that's a really high-performing company as well that has followed a different route off the traditional mode of venture funding, and so on and so forth. So we are okay with either direction, and we will guide you in a way that is so that you do the right thing that will give you the maximum success. So the whole point for you is to be successful. And we have a lot of experience doing this at this point, so we are pretty confident that we will be able to guide you with the right strategy and help you shepherd you along through that journey. Okay, so go to the website. You will find the ROI analysis of the 1M1M program. We offer $375,000 plus 5 to 10% equity worth of value, but just $1,000 annual membership fee. We do not charge equity, which is a very big, you know, huge advantage for the in terms of negotiating, in terms of your cap table, which you may not have the experience to fully appreciate it today, but it is you have to trust me that it's a very significant advantage not have to part with 5 to 7% equity out of the gate. So the 1M1M self-assessment is something that we request that you take your project through. Ask yourself these questions and see if you can answer them. If you cannot answer any of these, just come and work with us, and we'll help you answer these questions, but you have to answer these questions. Especially if you want investors involved, you have to be able to satisfactorily answer these questions. Okay, so you know, the website has tons of information, video FAQs, etc. Really, your options are to work with us in these free roundtables or join the premium program where we work with you much more closely on a weekly basis. And in the curriculum, you will have access to over 600 successful entrepreneurs and their strategies, their advice, and video lectures with which to learn on your own time. So, you know, not everybody can go join a physical accelerator and spend 3 months just sitting there at an accelerator. You know, you can't, maybe you're somewhere else and you cannot really move to Silicon Valley to join Y Combinator. You can do 1M1M from anywhere in the world at your own time. You can do it in the middle of the night. You know, let's say you have a baby. You can put the baby to sleep at 9 o'clock and then spend 11 to 1 at night doing 1M1M curriculum preparation. So it's completely flexible. It's designed to be completely flexible so that anyone, anywhere in the world, whether you're in Nigeria or San Diego or Australia, you have access to the program. You can do whatever, you know, do it at your own time, at your own pace. Our methodology is lean, capital efficient, bootstrap startups. Even if you raise money, you're going to have to bootstrap to a certain level of validation, otherwise investors will not invest. So that is just a pragmatic way of looking at entrepreneurship, and that's just what works. That's why we follow that principle. We help you a lot with PR and getting the word out, and you know, we have a huge community that we cater to. We have, you know, 250,000 people that we cater to, so it's a huge community into which you can get your message out, and we will help you do that through our media channels. And if you are somewhere in the world trying to develop your community, your entrepreneurial community, please consider becoming a partner of the 1M1M program. Upcoming free roundtables every week in October. Please try to make these roundtables. You'll learn a lot, I believe. And if you haven't found an idea yet and you're working in one of the emerging markets, look at Vision India 2020. This book has $45 billion ideas. You can take any of them and execute on it. It's an ideation book. It's designed to help you come up with an idea. Now, the 1M1M Incubator in a Box is our program, as our platform on which many of our partners are running their own incubation programs. And I want to welcome today people from Oracle. We just launched this week the 4th year of Oracle 1M1M Challenge. This is, I think, round 7 of the Oracle, or round 8 of the Oracle 1M1M Challenge. And we run Oracle's intrapreneurship program. So we have a lot of people today here who are Oracle employees who are, you know, starting to get familiar with the, you know, fall 2015 Oracle 1M1M Challenge running on our Incubator in a Box program. So folks, feel free to ask questions here. I will be opening the line up for Q&A shortly. And you are, you know, get to know the program and try to understand what you're going to learn here. And we look forward to seeing your applications for the Oracle 1M1M Scholarship. We also have a partnership with the Delaware government, which is right now going through the application process. So if you are in Delaware and if you're an entrepreneur in Delaware, definitely look at the Delaware Economic Development Organization 1M1M partnership. They are also offering scholarships to the 1M1M program run by the Delaware Economic Development Office. So these are essentially where our partners incubate entrepreneurs with us, and they provide scholarships to the 1M1M program. And today I just talked about Oracle and Delaware, and we have other partners as well on this platform. So quickly, the more recent books on the Entrepreneur Journey series are Billion Dollar Unicorns, Carnival in the Cloud, Bootstrapping with a Paycheck, From E-Commerce to Web 3.0. Look them up, look the other ones up, whichever is applicable to your situation, use them to learn. These are very inexpensive books, but you learn a lot from them, and it's a good entry point into the 1M1M program. We are ready for Q&A from the audience. So you can either call in to the number on your screen, or you can ask questions in public chat, and I'll pick up the questions from public chat and answer them. This is also a time when you're welcome to introduce yourself. Tell us where you're joining from, what you're working on, what brings you here, what objectives you know, you are working with, and why you're considering 1M1M as your entrepreneurship acceleration program. Let me see. Olin Hyde is asking, can you help us raise money? Absolutely, Olin. Absolutely, we can help you raise money. Let's see. Sandhi Mukherjee is asking, hi Shramana, is the private roundtable pitch session a paid session as well? Sandhi, the private roundtables are part of the $1,000 premium membership fee. So as long as you pay your annual membership fee to become a premium member, you have unlimited access to every single private roundtable pitch session. Does that answer your question? Somebody, don't send me private messages. Set your public chat to send to all participants so everybody can see what you're writing. So you sent me another private message which says, I was supposed to pitch in this session today, but I don't have the authorization from my clients to discuss the use cases publicly. However, I can discuss them in a closed group. My apologies for the last minute change. That's no problem. You're welcome to just sign up for the premium program online, and next Wednesday there's a private roundtable, and I'll be happy to work with you at that session on your pitch. Anybody else?
Shramana, Sai here. Can you hear me?
Yes, go ahead.
Yeah, okay. My name is Sai Prasad for the other audience, who are in this week's roundtable. I made a pitch in this, 1M1M roundtable last week on my venture called Call Bikes, which is an on-demand delivery solutions business that we propose to launch in India. And I'm calling in from Toronto, Canada today.
Right.
And I live and work here. So, Shramana, my question is, our product launch is 3 months away, and our early revenue stage is at least 5 to 6 months away. We are bootstrapping till our, first 3 months of operation. That is from today till 6 months till we reach early revenues. We are bootstrapping, but thereafter, for sure, we know we have no more money to bootstrap. So, is it a good idea to start, angel investor pitching now with whatever up-to-date updates we have from time to time, keep them updated, so that we don't end up in a situation.
I think I told you this, Sai. I think I told you this last time when you pitched. Right now, angel investors will not be interested in you. Even in 6 months, it's not clear to me that you'll be able to generate enough traction to get angel investors interested. So you better figure out a bootstrapping strategy, whether it's bootstrapping with a paycheck or whatever, so that you can have a much longer runway to get to a point where investors may be interested, because don't assume that there's going to suddenly from heaven some money is going to, angel money is going to land on your lap. That would be an unrealistic way to set yourself up.
So bootstrapping, you suggest, should continue for a longer time, 1 year or 2 years like that. It should continue for a much longer time.
You should set your expectations that you may need to bootstrap for a much longer time.
Okay. Got it.
Okay?
Okay, Shramana, that was my question.
You're very welcome. All right, who else? What other questions do we have here? Also, folks, remember, we are interested in introductions. There are a ton of people in the room. Please introduce yourself. Tell us who you are, where you're joining from, what brings you here today. Why are you evaluating 1 million by 1 million? Okay, while you're doing that, let me introduce you to Irina Patterson. If you have questions about the 1M1M program, please contact Irina. Her email is irina@1mby1m.com, and she'll be happy to answer any of your questions. I talked about Dan Stewart earlier, and you have Dan Stewart's testimonial. I promise I did not know that Maureen has put Dan Stewart's testimonial on this screen today. But Dan Stewart is a very interesting case study. Happy Grasshopper is a very interesting case study from the 1M1M program. We've really enjoyed working with Dan. No questions, folks? Maureen Kelly on our team is quoting a question from Quora this week. How does a bootstrap startup compete with heavily funded ones? Good question, Maureen. So I answered this question earlier this week. I will relate the case study that I answered this with. So I will answer your question with a fantastic case study. Hotel Planner is a bootstrap company that is now doing $25 million a year and is a market leader in the group travel and hotel booking sector. When they started, they had numerous heavily funded competitors who were spending money like there was no tomorrow. But they were not focused on fundamentals. When the market crashed, they could not keep raising money, and one after another, they all went out of business. Hotel Planner was slow and steady, executing with a fundamentals-oriented approach. In the end, they emerged as the winner. You can read the case study. We have, if you go to the Quora link that Maureen has put in, I've given a link to the case study. And also, there is a video that I've inserted here, which is from a prior roundtable where we had Tim Henschel as a guest, who's the CEO of Hotel Planner, and you'll learn a lot from listening to that conversation. It's a very, very interesting discussion. All right, folks, we are at 9:30 a.m. and let's see, Olin Hyde is saying one more, is commenting, we beat several competitors that were funded with hundreds of millions more than us. Good for you, Olin. We did it by focusing on personal relationships and exceeding on expectations. Delighted customers don't care about how much money is raised. Absolutely correct. So I think philosophically, Olin, you and I are completely on the same page, and what you're saying is music to my ears, that I don't have to, you know, orient you. We often get these entrepreneurs who are so hung up on raising money and as much money as possible that it takes a lot of time to teach them more of a fundamentals-oriented mindset. I'm delighted to see that you're already there. So congratulations. Ram Venkateshan says, Ram from Europe, ex-intrapreneur, ex-entrepreneur, and management consultant, currently heading partnerships. How big is your team, and if possible to reveal, who are they? Ram, we run a virtual organization. We have about 30 people around the world, and we are, some of them you've met. You've met Maureen, who's been coordinating this session. Irina, I just introduced you to. Those are the people that you'll be working with. If you're in the premium program, one of the other people you'll be interfacing with is Sheldon Chi. So, our people are all over the world, and we run a virtual team, and that's pretty much how we work. Where is this question coming from, Ram? What is the nature of your question? If you're asking for who are the entrepreneurs that you're going to be learning from, the answer to the question is different. So you may not be phrasing your question right. If you're asking who are the entrepreneurs whom you're going to be learning from, the answer is that over the last 10 years, we've had over 600 successful entrepreneurs, including 50+ billion-dollar unicorn entrepreneurs, over 350 entrepreneurs who have raised huge amounts of venture capital and built highly valued companies, and then numerous bootstrapped success stories. All these entrepreneurs have been part of our case study program, and they have very generously shared their stories, their journeys, and they continue to do so. You met one of them today, Dan Payne from Modernizing Medicine, and there are 600 others like that who have helped us build this program and continue to help us run this program and give their wisdom and their advice and share their journeys through this program. Does that answer your question? Just found out about your blog, etc., and share similar ideas to what you have, but trying to solve the unemployment issues here in Europe. Yeah, where in Europe are you, Ram? Germany. Okay, great. Excellent. For now, but telecommute to Finland, okay? Terrific. Yeah, we're, just as interested in working with entrepreneurs in Europe. If you want to become an affiliate program of the 1M1M, premium program, contact Irina and she'll help you, sign up for an affiliate program, affiliate partnership. Anyone else? All right, folks. Thank you for coming today. We will see you back here next week and all through October. Hopefully we'll have a chance to work with you and, work with you both here as well as some of you will probably move over to the premium program and we'll continue to work with you there on a weekly basis. It is a long slog. Building a company is a long slog. And that's okay. The satisfaction in building something meaningful, solving real problems, and building something worthwhile is wonderful. It's really, really rewarding, and we consider it a great privilege to be able to contribute in your journeys, in your process of building worthwhile, meaningful companies. Thank you again for coming today, and see you soon. Bye.
Bye.